Hey everyone, welcome to the Diet Doc Life Mastery Podcast. I'm Joe Klemczewski, back with the person that I'm going to nominate as our next Surgeon General, Dr. Jennifer Souders. So Jen, I appreciate you coming at us every week with these updates, helping everybody through the COVID-19 pandemic, living through it. You've been quarantined longer than anybody else up there in Seattle. And as people start talking about the economic side plus the physical health devastation, I'm hearing these comments over and over in the last week. Well, I know it's people are dying and that's awful and that's horrible, but what about the economy? And everybody's just kind of accepting the fact that there's going to be this massive physical toll. We've got the modeling. We know how many people are potentially going to die. And unfortunately, as that's happening, if it's not directly impacting you, it's pretty understandable that you're thinking about, how am I going to survive this? And that's what I want to talk about today. You and I have both been, for personal, business, and even colleague reasons, really tracking closely with the economic disaster relief programs. We're probably going to have at least 4 waves of legislation, and I believe we're already on the 3rd. I think that was the last one that was released. The $2 trillion was the 3rd. So I've got my pen and my paper. I hope you listeners and viewers do as well, because we're gonna unleash a lot of things, a lot of links and websites and information to help you survive this, you and your family, economically.
Let's start from the general and then move to the specific. You have, I'm aware, done much of what I have, which is, let's start with small businesses. I think a lot of our audience is going to be self-employed, independent consultants, gig workers. That's a very large segment of the population. So let's start with the Federal Small Business Association loans from SBA.gov, and that's your Economic Injury Disaster Loan, the EIDL. So that was the first one that became available. You applied for that one as well, didn't you?
Man, as soon as I saw the link through our Chamber of Commerce, I was on it. And that is the big daddy of all loans, of all assistance, because some of the other things that we're going to talk about are bridges toward that. But that is the application that is going to take probably more than an hour. You have to have your last filed year, could be 19 or 18, personal and business taxes, your returns that you can upload. And as I said, it's going to take you probably an hour to fill this out, but that gets you in the door. They were predicting at the time about a 21-day wait, and then it's going to be probably weeks later that funds are released. And because of that lapse in time, there were 3 that I'm aware of, and I believe there's still only 3 different ways to start accessing those funds even quicker while that application is being read and approved.
Correct. That's what I understand too. So the first one is the $10,000 or up to $10,000 advance on your economic injury disaster loan. So once you've filed that application with the Small Business Association, and this is all at the federal level, then the EIDL advance is actually a much more streamlined and very quick application. And the hope is that it's going to get people working capital to keep their businesses afloat, even while there's going to be delays in sorting through all the millions of applications and determining who's eligible and how much they're eligible for. I know one of the things that was interesting about the SBA loan, the granddaddy one, was that they did not have any area in that application for how much do you think you need. So my guess is they are going to determine that for us, but there really hasn't been a lot of information. What was your experience and understanding of that process yourself, Joe?
Yeah, well, almost immediately after I received a notification that they had received it, there was a ding on my credit score. So I subscribe to Experian, and I get in there and I can see that credit score and all that. So the SBA did do an inquiry on my credit, and exactly as you said, the reason why they need your personal and business taxes, they're not going to give a gig worker who made $30,000 last year a $3 million loan. So, and they don't also have loan officers. We've had 10 million people file for unemployment in 2 weeks. You don't have loan officers who can handle every application with a fine-tooth comb. So they're going to go off of the data that you have, and there will be algorithms used to say you qualify for this much. And I understand that, and that's just the way it has to be. But that's why there are levels of, let's say accountability through the process. So what you mentioned is that advanced, a 5 or 10 minute application. They simply ask you for the numbers. What was, from this year, from February 1 of 2019 through January 31st of 2020, what was your gross revenue and what were your expenses? Give me that bottom line. And so they're going to give you up to $10,000 of immediate cash upon 5 days of opening that application. And that is an advance against your eventual SBA, economic disaster and injury loan. And the interesting thing about these, Jen, is much of this money is forgivable. So there are stipulations, whether you have the advance or the actual loan. If you're using it for payroll, and we're going to talk about in a couple minutes the PPL or PPP that came out today. You might use it for a certain percentage, can be used for lease, for utilities. There are numbers and guidelines for that. When all this is said and done and it shakes out and you can document that you did that, then a large portion of that is forgivable. So it's important, I think, for everybody who has the potential need to submit these applications. Anything that is not completely used for operational expenses, payroll, et cetera, and it's not forgiven, that is a loan to be paid back, but it's a maximum of 4% and a minimum of 0.5% interest. You have a year deferment on those payments and up to 30 years to pay it back. You're never going to have cheaper money than this if you need it. And they're trying to get people to say, look, if, we're not trying to fund your inventory for the next 5 years or your future physical facility, long-term goals for 10 years down the road. This is economic relief. So I think there has to be some restraint on our parts here, but you also have to know that it is there and you should be applying for these things if you think you're going to be in a pinch, even 2 months from now, because, as we know, the stay-at-home federal guideline order is now through April. That could potentially extend through May once the virus starts rolling through other parts of the country. And we still have 10 governors who are still kind of denying this is even happening, saying, yeah, whatever, just be careful. And so you're going to have hot spots emerge. I think we should all be ready.
Agreed. Yeah. I mean, right now in Washington State, our governor extended the stay-at-home guidelines through May, so early May at least. And it's going to just keep rolling forward as long as the epidemiology indicates that it's necessary. And that's what's going to drive this. And really, unlike any other economic catastrophe, it's not a hurricane, it's not a tornado, it's not a flood. This is an ongoing catastrophe. So it's not a singular event. It's not a singularity. It is a continuum. And so the economic damage is going to be a problem. And again, there are going to be delays. I don't know about you, but I did exactly the same thing, I think on exactly the same timeline for the original EIDL and the advance. And they have emailed me indicating that they have the documents and they're working on them. But other than that, they've just said, well, it's going to be a while. And that's fine because as far as the pandemic is concerned, it's going to be a while. And if you have to run up credit cards or something temporarily to pay your mortgage, to pay your health care, to pay your utilities, the things that are necessary to run your business, then when that money comes, at least you can pay those off. And that's what you can show as justification. You just have to be really good at your record keeping and make sure that you understand what particular domains are going to be those forgivable ones.
And that would be a tragedy on top of a tragedy. And it's up to the federal government, because even the individual relief checks, they're now saying those are probably going to be available in 3 weeks. A couple weeks ago, they said they're going out Monday. Now they're going out in 3 weeks. And only the people who provided digital access to their bank accounts, the other people have to wait for another 3 weeks after that. So if people can't pay their rent, they can't buy groceries other than on credit cards and so forth, they're losing their jobs, and we get 2 or 3 months down the road, and this relief has been this slow, and we know there's going to have to be more individual personal relief. If bankruptcies start rolling in, I mean, right now it's unemployment and it's helping people survive. That's when the economy is really going to be curtailed for the long term. But let's come back to, for a couple of minutes, the next level of economic assistance through the SBA. So all of these guys are at sba.gov once again. But after that $10,000 advance on the original disaster loan, they came out with what's called a bridge loan to that big, original loan package. And that's a $25,000 capitalization. And it gets a little bit confusing because the advance and the bridge are simply now 2 levels of applications because you're having to wait on the first application. So now the federal government has tripled their loan application burden. And we're just still waiting for that initial loan application acknowledgement and approval and so forth. So it's I haven't even done that bridge loan application because I thought, Dr. Souders, that it's already been more than 2 weeks since I put in the first one, and so I'm probably just days away from hearing on that. The advance, I think I'm probably at the 5-day mark, so I should have already heard, and I haven't. So again, I'm just thinking, okay, another third layer to this, trying to get just in advance on the original loan that I applied for almost 3 weeks ago is probably just overkill. But I don't know if you looked into that one at all.
The bridge loan?
Yeah. Right.
I did, and one of the things about that, and this will lead us into the next layer, is the bridge loan is not through the SBA, but it is like the Paycheck Protection Loan. It is one that's going to be partnered through a local lender. And my problem with accessing that is the local lenders are still confused.
They have no idea.
Are waiting for direction. This morning, and I don't want to jump ahead too far, but this morning I finally did receive an email notification from my banking institution saying we have the application process up and running now for the Paycheck Protection Loan. So here's the link. So when we are done with this podcast, that's my next job, is to go and make that application. But at this point, I still have scheduled an appointment to actually go physically into a bank and meet with a banker because they don't have information out yet about this bridge loan. And what I do understand about this bridge loan is there are some significant differences on the qualifications between that and paycheck protection. So if you don't mind talking about that before we move into paycheck protection, that would be awesome.
Well, the biggest distinction, like you said, is it has to go through your local lender. So it's not the government just saying, hey, this is a disaster relief. We'll sort the details out later. Just apply here, give us some documentation, and we're going to hit the ground running. When you involve a local lender, then they're going to be the ones that say, let me see here. Let me go back and check your credit history and this, and do you really have the funds to pay this back? Because, again, this is in advance. It's a bridge to the original SBA economic disaster and injury loan. So they're taking a short-term risk to say, well, if I give you 25 grand, I got to make sure the government's going to give you at least 25 grand because I have the first right to pay back on that money. So if the federal government approved you for 100,000 and your local institution gave you 25 as that bridge loan, as soon as the government drops that into your account, your bank takes that first 25 out. That's how that would work. So they're at least taking this small, and it's SBA backed. I mean, it is probably FDIC insured, so there shouldn't be any problems, but I understand local banks are going to be a little bit more cautious. My banker, the head of the business loan department, and this is not a small bank, this is a massive regional bank you would probably know the name of. And as of yesterday, he had no idea even what it was. He was like, I think you're talking about this. I said, no, I'm not. And he goes, well, I don't know. So I had to literally copy and paste a slide from a Chamber of Commerce presentation, email it to him. And he's like, well, hang on, I'm going to have to check on this. So I'm telling the bank what the bank's supposed to already be telling us. And so when we got to the personal paycheck protection, which is that fourth and final level to this point of economic assistance, he said it's supposed to release tomorrow. And as of 9 a.m. this morning on the East Coast, Jen, all of the news agencies were saying, no, it's not ready. You know, it was announced to be ready. The banks don't even have the information yet. And JP Morgan, the biggest bank in the country, at least, you know, is now up and running. I'm still waiting for our bank to have it. But this personal paycheck protection is for, I'm not sure if there's an individual component to this, but for a business owner, this is an 8-week payroll protection provision. So you have to, when you're filling out this application, say, what is your average payroll needs, or what is your average payroll? So I literally went to my last year of QuickBooks payroll and said, here's my typical monthly payroll expense. We have some 1099, you know, people as well. And I said, okay, here's my normal monthly payroll. And then on the form, they ask you to multiply that times 2.5 because they want to make sure that you have enough. And then they're going to give you that for 8 weeks. But again, if you're using it for payroll, lease, and utilities, this is forgivable. So when you
Health insurance as well.
Health insurance as well. So
Yes.
if you apply for this, and that's why it's 2.5 times payroll, because they expect your lease, utilities, health insurance, you know, to be part of that. So this is a great piece of this. I mean, this is one of the most direct components of this whole relief legislation package, because it gives business owners the ability to keep people employed. And that's what is intended. Even like you said, Jen, if you have to dig into your own pocket and keep money flowing, do it, because this is on the way. This was, I think, 350 billion of the 2 trillion legislated last week. So when that money comes, it's 8 weeks. You don't have to pay it back. That is just part of that legislation that you have if you go through these processes and keep filing these applications.
Correct. And I think there's one distinction I noticed between the bridge loan versus the paycheck protection. And you alluded to this very well when you talked about how the bank is on the hook for the bridge loan, that is there taking care of what they are aware the Small Business Association is going to give you. So they are taking that short-term risk. As a result, the difference between the bridge and the paycheck protection is that the bridge has a credit test. In other words, unable to obtain credit elsewhere. That does not apply to paycheck protection. The Paycheck Protection Program is simply keep you in business so the economy survives over the next 8 weeks. But the bridge loan does have this clause in there that your bank, your lender, will need to determine that you are not able to access other sources of funding at reasonable rates. In other words, if you would have to put $10,000 on your credit card at 23% interest, yes, that's accessible, but that's excessive and not considered reasonable. So those are the things that make those two somewhat different.
Yeah, and I was just going to say that the reason why the government is putting this burden on the banks is, number one, it puts the people in your community. You know, these are the people with the lending institutions that you already deal with. You have accounts with them. So I understand that they're asking them to take care of the bridge loans and the payroll protection. But at the same time, the good news with that is banks are in a good position. This is not like the Great Depression where banks were failing. This was not like the first, President Bush's savings and loan bailout thing that left banks in a horrible position, or Bush 43, whose financial crisis, bank crisis, collapsed the banking system again. This is a rare time that we're in this economic conundrum, but the banks are actually in incredibly good shape. I mean, probably the best they've ever been. So they have the ability and the capacity to do this. I just really hope that they step up, and I'm not complaining whatsoever, because I know how busy everybody is and all this information is flowing so quickly. But I really hope they get up to speed, and I really hope they expedite these kind of, provisions for people, because that's what they are there for. That's their role in this. The government is going to rely on them, and the government has bailed them out so many times that now is their chance to return the favor for the American people. And I hope they do that.
Absolutely. I mean, we're looking at potentially not recession, but depression if we're not able to get through this economically. And we don't know which way it's going to go, but recession is bad enough, but depression is certainly something that we'd like to avoid economically, because that is quite serious. And as far as when you look back, just as an interesting aside, if you look back and you analyze the economic data following the 1918 Spanish flu pandemic, those areas that had the earliest, strictest, and most effective social distancing programs also had faster and better economic recovery. Mm-hmm. So if you don't care about your health or the health of others, but you do care about the economy, you need to be just as committed to this social isolation, social distancing, stay healthy, stay home program, and you need to adhere to it to a T if you want our economy to survive. If you care nothing about humanity and only your pocketbook, you should be fervently following this advice.
Jen, I have been screaming that for the last 4 to 6 weeks, and I had a big long post with an article posted from The Atlantic describing that. This is not either or. Everybody on the different political divide has tried to justify their behavior as this is the economy or the pandemic, the health crisis, the lives lost. It is not. I mean, it is. If, like you said, if you care about the economy, you will do this. You will go through the social distancing. The governors, the pastors, the people who are still saying, no, you're not going to tread on my freedom. I'm going to save the economy. They are the ones who are going to destroy their own economies. They're going to be in the worst positions because of this. So it's not, you don't have to go back to the 1918 Spanish flu to see this. You can just see it in even the responses to other economic crises we've had. But let's go on to the student loan issue, because I have been trolling around looking at other industry-specific grants and places for assistance. And I do understand that student loan, at least deferments, payments have been deferred, or interest, or I'm not sure exactly all of the details on that. So I'm going to let you fill us in.
All right. So yeah, I have a child who recently graduated from college. So she has her own student loans, and then I have parent student loans. So we obviously, like many families, parents also take out college loans to assist their children. So we're both subject to this payback, and we've both been experiencing some issues with it. So the first thing that came out in mid-March, I believe around the 13th, was when President Trump stated that interest rates on student loans would go to 0%. So my due date arrived for the student loan payment, and the student loan payment was due in full, and the interest was still there. And the Federal Loan Servicing noted that we are waiting for direction from the U.S. Department of Education in order to implement these new laws as part of the CARES Act. So recently, there were some updates. I believe it was, am I correct in saying it was the 28th or the 30th of March? President Trump expanded the next tier of relief. That included postponement of all student loan payments for 6 months. So this month, I go and look at the Federal Student Loan Servicing website, and there, lo and behold, is 0 interest, but my full payment amount is still due, the full amount on the due date. Again, we are waiting for further direction from the U.S. Department of Education as to how to implement this. Now, there is a caveat, and this was always available. If there's a little button that says, I cannot afford this payment. So your option is that you may take a 60-day temporary forbearance if you can't make your payment, rather than going into default. However, that forbearance does have a negative effect on your credit rating. Guess what is looked at very closely for your SBA loans is your credit rating. So this puts people in a dilemma. Now the forbearance, if you take the temporary 60-day forbearance to get you through until it's official, quote unquote, and your loan statements show zero due on your due date, you will survive economically because you will not be shelling out that money. However, do be aware that if you take a forbearance, it can impact your future ability to request refinancing or forbearance, and it may negatively impact your credit score. So you are stuck with a decision-making process. Can I afford this payment? And the advantage being that you'll be paying down all principal with no interest, or can I not afford this payment? And for many of us, that decision hinges on, when am I getting my advance? When am I getting my stimulus check? When am I getting my unemployment? When am I getting my Paycheck Protection Program? So it is really like a rolling series of acts and deadlines, each one kind of building and dependent upon them, like a freight train rolling by, and the box car that goes by looks really great. And, if you're delivering your assemble at home sofa, maybe the cushions have just rolled by, but guess what? The framework is still 87 box cars behind. So it's really going to be a challenge for people. And I can't advise people what to do, but I can advise them that they need to be aware of these issues and consider what their situation is and make those choices, and do so with advisement of their own situation. I think the other thing that's important to know is FFEL, which I forget what that abbreviation stands for, I apologize, and the Perkins loans. These are not eligible for the student loan deferments and non-payments and 0% interest. So if those are your situation, you either need to negotiate with the lender or with the school where those loans were obtained, or in that circumstance, you may want to consider student loan refinancing or even personal loans from your own lending institution. So those are some of those issues. And I think it's very confusing because federal direct loans are covered, but these other two loan types are not.
Well, I would definitely, first of all, I think that's amazing advice that you have rooted that out with the loan issues, student loans. But I would certainly advise people to pay that so they don't hit that ding on their credit card or their credit score. If you can at all, until this lag time has evaporated, make that payment so you're not delinquent. If you are waiting on other assistance, the SBA Paycheck Protection and so forth, that is dependent on your credit score, it's a decision to make. But I really do think, Dr. Souders, that it's just a lag time. By the time somebody gets the directive that this is going to be the law, then it has to be drafted, mailed out to tens of millions of people. You're getting that information a week later, and then something different has just been announced in the federal government. So
right.
I'm sure it's probably going to take, until this next cycle for that to be completely finished. But I would hate for somebody to get stuck in that administrative hell where all of a sudden you've got that against your credit report that can't come off for another 30 or 60 days and you're just stuck. So, I would say in this particular flow of the conversation, a lot of people in the news media who are going through financial counseling recommendations are saying, look, contact some of your lenders directly. And you're going to get some great news from a lot of people. We mentioned last week that Bank of America and some other people have said, look, if let's just put a 60-day pause on mortgages. You don't even have to make the payment for 60 days. You're not going to get charged extra interest or fees. We're just going to tack those onto the end of your loan. There are a lot of things available like that. And because, like you said, everything is hinging upon the relief package that you might be waiting for, I certainly, I'm responsible for 2 commercial leases. And I was able to suspend one. I contacted them directly, and I was able to work out a 50% payment for this first month with another, just saying, hey, let's just wait and see what's going to happen. I don't even know. I'm doing end of the month, end of the quarter accounting right now, end of the quarter accounting like everybody else. I don't know how far down this is going to take us. I don't know what the next month or the next month is going to look like. So I certainly just can't start shelling out the normal amounts of money and receivables, payables out the door, and then not be able to take care of our own staff, our own families, and that sort of thing.
Exactly. And I think it's similar for all of us. We just have different themes and variations depending upon what our obligations are. Yes, if you can avoid paying a mortgage or other things that have been delayed. Obviously, if you're someone who owes federal income tax, which I'll talk about that in a minute, so that payment has been delayed. In my city and county, the state property taxes, if you have a mortgage and you don't have an escrow account that already covers those, along that it's not included in your mortgage payment, that is a huge imposition. That is thousands of dollars that comes due April 30th and October 31st. So those have been postponed. So the money that you were needing to spend on, say, your mortgage, or if you can get a payment plan with your gas and your electric and your water and your other public utilities, every bit of money that you don't have to go spending right now you can save that aside and make that payment to that student loan to keep your credit intact and avoid defaulting on that, because that is a big one for credit scores. And so I think that is probably, if you can manage that, that's my plan. That is the most prudent way. If I can find rice and beans in the grocery store, I'm prepared to just eat them for as long as it takes, right, until things turn around. You want me to talk a little bit about what's up with federal income tax due dates?
Yes, I'm completely unaware of those at this point, so please do.
Okay, so for a lot of people who are self-employed, gig workers, independent consultants, or running their own businesses, if you owe money and you do not have a refund, everyone who files early is expecting a refund. And that is one of the things that helps the federal government to get your stimulus checks to you faster, because if they have your bank account information for your refund for your 2019 tax filing, whether it was 1040 or the easy form or whatever, they will be able to deposit that. Now, if you're an independent business owner like myself, who typically winds up owing something at the end of the year, because my estimated taxes, which I'll get to, are simply that, an estimate. So there are years where I owe. And so for those of us who do owe, we do not have to either file or pay federal income taxes until July 15th. And this is why when you do the Small Business Association, the Granddaddy Loan, the EIDL, they will ask you for your tax return information from 2018 and 17, because you are not federally legally required to have filed 2019 yet. I mean, it's not even April 15th. So clearly when I was applying, yes, my taxes were ready, but I hadn't filed them because that's a lot of money, and I was waiting to see where these other things were going. And there was a strong suspicion from my tax advisor that these were going to be pushed out. Now, if you are someone who also pays estimated taxes, because you are someone who pays yourself and there isn't withholding in that situation, the estimated taxes, the first payment, there's 4 payments per year quarterly. So your estimated taxes, which is based on your previous filings, those are, the first payment is due on, instead of April 15th, is also due on July 15th. That's both good and bad. Now you have 2 payments due on July 15th. So it's whatever you might have owed left over from 2019 and your first payment from 2020. Again, this is where planning and economic relief are going to be so crucial. Finally, here's the fun one: quarterly estimated federal income taxes, if you're a quarterly filer, payer of estimated tax. The second payment is due June 15th. Quarterly, right? It's still due June 15th. So payment number 2 is currently due before payment number 1. I am just holding pat on that. I assume that's going to be moved out. But people, if you want to be prepared, please be aware of that deadline, that it's a month earlier, and don't just make invalid assumptions. I would be financially preparing that that deadline could get overlooked, mistaken, or somehow not changed. And so be making the plans to deal with that. Now, it may mean that you are going to have an estimated payroll paycheck this year. It's going to be minuscule.
Mm-hmm.
So when you look at your business and how much you've lost, you may want to not pay what you've normally been paying for quarterly taxes. Take a darn good hard look at what first quarter 2020 has looked like. It probably doesn't look good, and second quarter isn't going to look so great either. So be planning on that payment, work with your tax professional, and make that payment on what your realistic 2020 income is going to be. This is not the time to be sending a lot of money to the federal government and then waiting for a refund next January in 2021.
Mm-hmm. Yeah, what I was going to say there, Jen, because I actually was aware of those deadlines. I thought maybe there was some new information coming out, but simply pushing the deadlines back was one of the first directives from the government. But I would also say, because we're throwing out so much information, so many websites and names and links and so forth. If you are a small business owner, you probably do have a tax professional working with you, a CPA, an accountant. And I'm sure they're staying up on this. So a quick email to them and just letting them know that you're watching all this stuff, and hey, please keep me apprised of, things are changing, what I need to send when. But the last thing that I looked at, Jen, and this was part of our Chamber of Commerce, who's sending out daily webinar information, and it's so incredibly helpful, is there are so many different industry organizations that have just truly philanthropically jumped in to help their members. So there are national boards for, restaurant owners and bar workers and, beauticians. There are so many of these governing agencies that have said, hey, look, we have just instituted a $500 grant. If you're a beautician, contact us here and we're going to get you $500 in the mail right now. So, just look around, do some searches online, and whatever professional organizations you belong to or agencies that may supervise or govern or regulate, license, credential your particular occupation, you might find some help is available that you're not aware of. Even something like Facebook. Zuckerberg's pledging $100 million in Facebook ad credits. So obviously it's not money he's giving you. But if you have a business and you could use a little free advertising, you can go to that particular link on Facebook and get, I think, $500 worth of free advertising, which could help on the stimulus side of this recovery. So there's just a lot. I mean, I'm pretty heartened that so many people are doing everything they can to chip in, and it's just our responsibility to know where it is. I put a message out on our particular company's coaching and program owner forum that, this is one of those times where it's almost like in the plane, put your oxygen mask on first so you can then help other people. You got to take care of yourself. You got to take care of your family. You got to take care of your business. But at the same time, look and see how you can be helping other people with at least this kind of information and assistance. And I just love it. I see so many of our program owners and friends, Jen, who are delivering meals to people, who are checking on neighbors with the appropriate social distancing. But anything they can to help, and I just love that. That's the silver lining in this.
I totally agree. No act is too small to be significant. All small acts are significant to that one person. If you have an elderly neighbor and you're going to the grocery store and you can contact that person, say, hey, I'm going anyway. Do you need something? You've just contributed to the health of your community and the safety of that vulnerable person. If you help just one person, you've done something bigger than yourself for humanity. So don't shy away from any act, however small, because nothing is small right now.
Absolutely. Well, Jen, that's all I got. I don't know if you have any other secrets up your sleeve, but that's all I know right now.
Yeah, I could certainly go on more about local things and unemployment. Maybe we'll discuss that in a future podcast. We'll see what comes of that. That's been a big black box for a lot of people. And again, that's very localized, and that's the problem. Sort of like the student loans, you'll find that the federal government is giving guidance and support to unemployment, but each state or locality implements it differently and has its problems. One thing that just in general for people to be aware of is, at least this is true in Washington state, and I understand elsewhere, people who were self-employed, independent contractors, gig workers, etc., they were typically not eligible for unemployment. Now they are. But if it's like our state, they're closing down on all those applications right now because they actually have to reprogram the computers, because those would automatically have been applications that would be kicked out by the system. So all those people need to wait a minimum of 3 weeks until they get the computer systems up and running. And if you are, let's say you're a fitness professional and you have a small studio gym, and that's where you meet your clients and do your nutritional consulting, and that's all closed, you are functionally unemployed. Yes, you may be able to be doing some things web-based, but functionally you're unemployed. Your business
revenue is not coming in.
It's closed. So you are entitled to that, and there's an extra $600 per payment in addition being supplemented by the feds. But you will, again, need to wait for your local system to be able to change its formatting so that your application isn't kicked out. And of course, we've seen, I think it was 864% increase in 1 week here in unemployment applications. So it's a matter of waiting and being patient.
Well, I'm glad you brought that up. That is a good place to end with the unemployment, because the $600 per week additional federal money to go on top of the state unemployment insurance payments is profound, because that's more than most states would give per week as a maximum. So let's say your state allows $400 maximum per week in employment. Now the federal government is putting $600 on top of that per week for up to 13 weeks. And your state unemployment benefits are being extended. I think they're, most states now a year or so. I would check on that if I were you. But this is where you have to make a decision to say, okay, if I can start that process and at least get that much money in, $1,000 a week, and then all of a sudden I get this PPP protection coming in, and maybe I can get my full income, that could allow you to then say, okay, this unemployment was a great little safety net, but I'm going to decline that because now I have this. Or maybe that unemployment, because of the length of time and stability, could be something to hang on to until you actually have full revenue coming back in, full employment. But then you've got those stipulations of having to prove, that you're looking for a job and that kind of thing. So, a lot of layers to this, and you'll have to sort them through your own grid of what you need, your needs, and how that all applies to you.
Yeah, and I think you do need to check locally. Like here, the governor has said you don't need to be searching for a job right now because there aren't any jobs to find. The other thing is for everyone to realize those payments, despite you having to wait to get them, they are retroactive to your unemployment date. So you will get a huge lump sum in once it finally happens, and then you'll get the payments going forward. So again, if you are having to go into credit card debt or something in the short term to buy your groceries and things like that, the relief will come to at least pay off those debts. So people should be aware of that. It will be retroactive once it is authorized.
So who would have thought that two health and medical professionals would be spending all this time talking about legislative tax code stuff? It's just survival, Jen, right? I mean, we know these things because we own businesses and have staff and people who depend on us, and this is important for you guys to dig into. So I really appreciate you, Jen, for chipping in.
Thanks, and I appreciate you too, Joe. And I'm really grateful we can help people understand that preserving our health in the stay home, stay healthy is also preserving our economy. So I think that if we've done nothing else, we've educated people. This is all part of the same thing. We all got to do one thing to fix all these problems.
Okay. All right. And thank you guys who are watching and listening. If you think anybody could use this information, I think this is going to be especially profound just because of all the updated information maybe obsolete in a week or two as more legislation comes out. So this is your chance to share this with people, get this link to people. And Dr. Souders and I will keep coming at you with this. Corey and I, Dr. Probst, will continue in the Diet Doc Life Mastery podcast. So you guys just hang in there, be well, and we will see you next time in the Life Mastery podcast.